What's up, guys? We have a lot to go over. Tesla's down 2%, the S&P 500 is down 1.5%, and the market is not looking hot. We're going to cover if I think Tesla is going to still move up to max 260, why I believe we will eventually fill the fair value gap down to 222. We're going to cover the even further fair value gaps sitting down at 200, which I do not think will probably be hit anytime soon. And we're going to be going over the S&P 500 as well as QQQ because both of them are sitting currently at major supports that need to hold. After watching the S&P 500 break through this support level and this head and shoulders play out, we have to hold $420 or we will continue to move our way down to 408 and maybe even down to 400. We're going to explain all of that as well as go over a lot of big tech and a lot of other companies that you guys have been asking me to cover, as well as much more. My name's Peter DiCarlo. This is Traders Helping Traders, where we help you guys grow your trading portfolio each and every single day. All of our resources are completely free in our Discord community, which is linked below. Over there is everything that I have learned in my 8 years of trading. There's over 12,000 members, and our goal is to help simplify trading as much as we possibly can for you guys and to make it as stress-free as possible. Now, there are going to be a lot of indicators that you're going to see here on your screen. So if you're somebody who is new, please do not get overwhelmed. In the Discord community, we do have a technical analysis mastery course, which is free. I do recommend you check it out if you want to take trading seriously or even investing seriously. Watching major levels such as the daily and the weekly timeframes is important as a long-term investor unless you're, looking at 10-year horizon minimum. Now, looking at Tesla, yesterday we were looking at the potential move back up to $260. The indicators that you currently see here is a smart money, which is Lux Algo, smart money concepts up here at the top left. You're going to see a 200 SMA, a 50 SMA, an 11 SMA, and a Heikin-Ashi overlay candle. If you just go into the indicators section, you're going to be able to look up this Heikin-Ashi overlay, which is what the yellow candlesticks are. Basically, a Heikin-Ashi is a different candle than a regular candlestick. It's very good at showing the trend. It is very good to trade, but the issue is that it shows you a misrepresented price of what the price action, first of all, was for the day, and it gives you guys not the actual real prices. So if you go and back test something or plan a strategy out that revolves around Heikin-Ashis, please do not run just Heikin-Ashi candles. Run an overlay so that you can see both of them. Now, the reason that we are looking at Tesla to move potentially back up to 260 is because from the swing high here down to our most recent swing low of 235, our golden zone level, or basically the area where we will probably reject, is up between 258 and 263. The other thing to notice is that we have a fair value gap sitting right here at about 263.60. Now, there are a lot of fair value gaps all over this chart. There's one down here from April 2023, another one down here from May, and all of these gaps will normally fill. There are gaps from all the way back down here in January of 2023 that hopefully will never be filled all the way back down here because that'd be a 55% drop, but it is something that we have to take into consideration. We were probably going to fill this fair value gap up at 262, and then from there we would catch retail thinking that we're going to move our way up to all-time highs, and big money would pull the rug out and we would see a rejection from 260/264, move our way back down to support of 240, and then unfortunately move our way down to 215, which would fill the fair value gap over here on the left. I still think that there is a good chance that that will pan out, and that's what I'm looking to play at this moment. That being said, trading from 245 long up to 260 in the next couple of days is probably not worth it unless you run a very tight stop loss under 240, because if we break and hold under this 200 SMA, which is the yellow line that you see here, that will be a very bad sign. That, coupled by the fact that we have very low volume on this volume profile, the volume profile is these horizontal blue bars that you see here. This is going to show you at what price big money is coming in and out of. And the reason that this is important is that we need to be trading with big money because they are the ones who are going to move the market for us. If they're not in the trade, then the market's not going to move, and we need to be playing around these areas of liquidity so that we can get in and out just the same that they get in and out, because what they're normally going to do is trade in and out of positions during these very wide areas. And when we have these very thin areas, for instance here, once we broke under 240, retail is not buying this dip until we get down to 207, which once we started getting down to 214, 212, 210, this is where we started to see whales buy up, and then that's where that bounce occurred. So in short, we want to trade with these thin areas, because these thin areas mean that this is going to most likely drive itself down to 212 if we break 240, which is why 240 has been such an important level and will continue to be such an important level over the next couple of weeks. Now, if we zoom out real quick and we look at the daily chart, you're going to see a little bit different of a story. Yes, we did get the bounce. Yes, we could still potentially get this head and shoulders pattern, but something to note is the fact that we do have a red Heikinashi sitting here, which is not a good sign, holding under the 11 SMA, holding under the 50 SMA, and flirting right along the support level of 240, where we have this big area of volume. If we continue to reject here, expect Tesla to fill that fair value gap back down to about 220, and worse, back down to 208, which is where the 200 SMA is, and this big area of volume on the volume profile, which is called our point of control. The point of control tends to be a very, very strong support level, but if we did pull back down to 196, I believe we would probably fill this fair value gap back down to 189.98 as well. My personal plan is hopefully we see Tesla maybe move its way up to 260. If not, we see it break down, hit this fair value gap. Once we hit about 210, 212, I will start selling cash secured puts down to 195 and 180, so that this way, if the stock ends up bouncing, I will make a premium. But if not, I'll get to buy Tesla long term down at 195 to $190. And if you guys want me to do a comprehensive video and live stream talking about how you can sell covered calls, how to sell cash secured puts, comment down below and let me know. I am going to be doing a risk management video soon. I've just had a lot that's been happening within the office, but I do know that you guys have been very excited about that. We did put the PDF out for that on my Twitter account. So if you guys want access to my trades, I put a lot of free trades out on, and I also put a lot of great trading material out over there and in our Discord community. But watching Tesla, we need to see this hold of 240 into the next couple of days. If we move our way over to SPY, you're going to see that this is a perfect example of what we were talking about earlier, of this area of support and this thin area of volume. Once the S&P 500 broke and held under 430, which is right where the big area of volume was, we quickly dropped down just within 7 days, about 2.5%. And now we're looking to see that SPY should hopefully bounce here at the 200 SMA, which we know is a very strong support. And if not, I think the worst we will see SPY is back down at 408. But we were saying back here last week that another 5% move back down to 410 would most likely happen, and it seems like that's what's going to occur. There's a chance that we could bounce here and move back up to test 430, but the 200 SMA is very strong, so I personally would be probably covering any puts that I have in the short term. Now, looking at big tech, more specifically QQQ, this has sold off aggressively, but we have not actually made the head and shoulders move down to 330 like the counterpart at the S&P 500 did. In this case, once we break 355, we have a fair value gap as stated before down here. We know that these tend to fill about 75 to 80% of the time. That, coupled with very thin volume below 350, means that if we were to get this break, we would most definitely get a drop at least to 337, which is a 5% move to the downside, which would fill that fair value gap here on your left. And that would also drop us down to the 200 SMA, where we start to see some volume filling up, and hopefully we would end up bouncing from there. I hope this video helped, guys. Pretty short and sweet because I do have something that I have to do after this. But thank you guys for all the support. If you want to trade with me every single day, get access to all my trades, all my trading bots for free. Your first month, you can use the second link in the description. That is one of the best ways that you guys can learn to become consistent and most of all profitable we teach you guys not only how to trade, how to implement our scripts and strategies, but more importantly, how to use proper risk management, because being in charge of your own risk and your predetermined losses is something that 99% of people cannot do correctly, which is why 99% of traders fail. It's all about your emotional intelligence and your ability to become the dominant factor in your life and controlling your decisions and controlling your emotions. And that's what we help you guys with most. Thank you for all of your support. Check it out down below, and I'll see you next time.